Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 14th. I want to take just a brief minute to discuss what equity markets did last week. As wow, the markets continue to move higher as we've gotten great corporate earnings. We had a very, very good jobs report last Friday, and that continued to power markets higher. And so last week, the S&P 500 was the winner on the week, up 2.33%. A really good week in the S&P 500. The mid caps, as measured by the 400, were up 1.65%, and the small caps were positive, but the laggards on the week, as measured by the S&P 600, those were up 70 basis points or 0.7%. And as we moved into this week, volatility was really creeping into the marketplace. We have a lot of things going on in the market, but the market really has overlooked those and moved past those recently. So as we started into the week, we were waiting on the outcome of maybe what was going to go on between the United States and Iran, and those headlines were breaking about the Strait of Hormuz, oil prices, things along those lines, and the market has kind of shrugged that off. And then you move forward to Tuesday, Wednesday, and we start getting the inflation numbers. We got the consumer price index, or the CPI, on Tuesday, and that showed year-over-year inflation at 3.8%. And of course, a lot of this has to do with higher energy prices, but it looks like inflation continues to be pretty sticky above the Fed's 2% target rate. Why does all of this matter? Well, PPI we got again on yesterday, on Wednesday, and that came in much higher than expectations, 1.4% month over month versus the 0.4 estimates, and a pretty hot number year over year. And why this all matters is, well, we're transitioning Fed chairs by the end of this week. The Fed chair, Jay Powell, will finish up his 2 terms as Fed chair, and Kevin Warsh was confirmed as the new Fed chair and will take over. And so why does this matter? Well, typically when you do get a change in leadership at the Federal Reserve Bank, there is typically some volatility that follows in the marketplace. Even if you go back to Chairman Jay Powell's term in 18, and when he famously said that they were going to continue to raise interest rates until he couldn't see any further, and then the market sold off famously on a Christmas Eve. He changed his course, of course, the 26th, and the markets returned right back to where they were. But as new Fed chairs take over, there is typically some volatility historically that comes and coincides with that, as well as we have uncertainties going on between the conflict between the United States and Iran. We don't have a clear path forward yet on when maybe energy prices may start to subside a little bit. But also going on while all this is happening is you have President Trump flying over to China and meeting with President Xi Jinping of China, and the delegates between the two countries have been meeting and will continue to meet. And from the news as of 2 o'clock on Thursday the 14th, the news coming out seems to be, for the most part, relatively positive, and has allowed markets now to be at all-time highs where we sit right now, as it's overlooking some of this inflation data and looking past to other issues that are going to continue to further our economy forward. And so while the market is shrugging it off now, inflation, of course, is something that we need to keep our eyes on as it affects the long-term Treasury rate. And why that matters is the long-term Treasury rate, that specifically the 10-year, which tracks these inflation rates more, is not controlled by the Fed funds or the Fed by any way. It is market controlled. And why this matters is most mortgages are priced off of the 10-year Treasury. And so if you see an increase up in the 10-year Treasury, well, mortgage rates follow on the upside. So on those rates. And so could see continued slowing in one of the sectors that's very important for the United States economy, which is housing. So we're continuing to monitor all of these things. So if you have questions about how to navigate this market or what's coming next, maybe we do get a little volatility with the new Fed chair. We're happy to walk you through how to manage that and how to navigate moving forward. So you can reach us at 904-346-3460. As always, check us out online at www.riverplace.com. capital.com. I hope everyone has a wonderful week. Thank you so much for watching, and all eyes next Wednesday for NVIDIA's report. We'll be watching very closely. Have a great rest of your week. We'll talk to you soon. Thank you.